Hilbert is a quantitative investment firm focused on cryptocurrencies. We're a money manager first and a crypto investor second. Our core trading strategies can be used in many asset classes, like equities, but crypto is a really great asset class for what we do, given some of its extreme characteristics. We've been doing this for more than 5 years and have a 5-year audited track record. And the firm is listed on a traditional exchange, the Nasdaq in Sweden, which brings us access to permanent capital to invest in the business and a high level of oversight of governance and the balance sheet. Assets of over $100 million across funds, managed accounts, and private investments. And we're a team of 16, which includes 4 quant PhDs, whose sole focus is to research, develop, and implement quantitative trading strategies which are coherent and make money in crypto markets. Now, this picture captures the essence of what we're taking advantage of. The grey lines show the noisy price development of 40 cryptocurrencies over the last 2 years during a bull market and a bear market and a crash. And the blue line is the Hilbert V1 strategy return during that period. So the things that we're taking advantage of include the extremely high price volatility, decorrelation across assets and cohorts of assets. They're not moving precisely in lockstep moment by moment, and mean reversion, which we see from time to time in crypto. What we're not trying to do are pick out winners, losers, or guess fair value for any assets. Hilbert V1 Fund is a market-neutral profile, and by that we mean generating consistent trading alpha and not drawing down with the market when it falls materially. At the core are Hilbert's quantitative trading strategies. Now, these have been developed and implemented over the last 5+ years based on fundamental mathematical theory and trading experience to exploit some of those factors that I mentioned just now, like correlations, volatilities, and mean reversion. Now, that's the core, and it generates 100% of the risk and return that we're targeting for this fund, and we size it to a maximum drawdown objective. The core then leaves us with a portfolio of liquidity that we deploy into opportunities, and those opportunities need to meet each of 2 criteria. The first is that they cannot add additional drawdown risk to the fund. And secondly, they should provide an incremental return boost to the core returns. Now, we use that term opportunities deliberately because these are trades that come and go. So we don't make them the core of our returns, but they're a nice boost on top of the core, which is the quantitative trading strategies. Here's the track record. The white area is the live track record since this implementation started trading on the 1st of May. And the grey area is the back test. The back test is based on the same underlying algorithm that we've been running over the full period with capital. And to validate the back test, we've continued to run it in parallel with the live track record since the 1st of May, and the 2 map each other identically. It's an attractive asymmetry in terms of limited drawdowns, even during an extreme market meltdown like this year, and annualized returns of above 15%. Summing up the value proposition, Hilbert V1 Fund is a coherent, repeatable, and scalable strategy. It offers an attractive risk-to-return asymmetry, limited drawdowns, and high upside returns. It benefits from ongoing strategy development through our applied quantitative research. And we're offering compelling fund fees and an expenses offer. So the founders class, which is still currently available, although most of it's now been taken up, offers fund fees of 1 and 10. And Hilbert is paying for the full fund expenses for the first 12 months, meaning 0 drag on fund performance. We firmly believe, and in our experience have seen, it's possible to do simple things in crypto and produce attractive return streams. Thank you for your 300 seconds.